Hi and welcome to the Market Alert for Tuesday the 23rd of November 2021. So it wasn't going to be the end of the week then. Biden decided early on yesterday to pick Powell and have the continuity at the Fed, and Brainard ended up being the vice chair. The president is going with continuity, as many had expected. That means he can blame Powell if it all goes pear-shaped. That's the reason. The Powell top is what some are predicting. Finally, some moves. Well, definitely with the tapering that's already in action, and also the fact that now they are pricing in a rate increase in June of next year. A lot can happen between now and then, though, and I would make the prediction that we will see more printing before June of next year. Biden anoints Powell as continuity, wins out Fed. Warren shifts focus to vice chair for supervision. Biden appeared to be falling asleep to the sound of his own words. Well, I'm not going to comment about that. And this is the interesting news item for me, actually, is that Biden Thanksgiving is the most expensive ever, as traditional dinner costs soar 14%. It's something that I've been talking about in the Market Alert for quite some time, that inflation is sitting around 15% in the UK, and 14% doesn't surprise me one bit in the US for Christmas dinner. News today, it's all flash news this morning and then into the afternoon. It's a messy day to start with, because obviously we've got all of this news. If it's negative, then it's going to support the narrative to the downside at the moment, which we're seeing weakness overnight already. It's holiday week. The markets are going to be thinly traded. They'll be able to push prices around as they desire. So be warned there. Right, let's have a look at the Dow. And that's the DAX. So somewhere in here we've got the Dow. That's why. Okay, so we're seeing a lot of weakness in the Dow at the moment, and we're seeing this overnight as well. We're below the 20-bar moving average. We're below the 5-bar moving average as well. We're also heading down towards the support where we saw the last move to the upside, which is at 35,495. Close below here will move us lower, and you'll see here we've got this low here down at 34,109. So between these 2 points, if the market breaks the area, then this is the fib retracements to the downside, the 89 tying in with the 200 MA there, if prices move that far, of course. So now this is the next downside target, 35,495, and the 50% retracement has to start showing some support. If not, we continue through the rest of these fibs, as we've done in previous corrections in the Dow. Yesterday, the market moving higher when Powell was reselected, trading up to the 200 MA. The market then came down, traded back up to the 200 MA. We saw some selling coming into the market, and then there was a short squeeze as yields exploded on the basis of the rate increase expectation for June of next year, and the market sold off. Meanwhile, overnight prices have traded to yesterday's low, which you can see they are doing their best to get back at the moment, which you expect at the low in a bullish market. You need to close above the 5-bar moving average and the 20-bar moving average, and certainly head for the DP if there is to be any progress to the upside in the Dow. In the German DAX, we can see yesterday another down day as the gamma unloaded from Friday's option expiration. As I showed you in Friday's Market Alert, this can roll over to Monday, and that's what we saw yesterday. Prices below the 5-bar moving average and trading to the 78% retracement from here, drawn to here and then projected back. The 20-bar moving average sitting with the 89% retracement as well, crucial area. And then we've got the low to the left as well, which we'll just draw in, would be a major support, because here we've got demand coming into the market. What I mean by demand is this bar is narrower in range than the previous bar's range, or the previous day in this case, and the volume is greater, so it found support and then was able to move higher as they absorbed the selling that came into the market there. In the 30 minutes of the DAX, again you can see that we were moving down throughout the day. We had a bounce back with Powell to the DP area. It was once broken. You can see that it became a resistance and then moved lower. Came back to this resistance, and then prices moving lower as well. And then overnight with the Dow and also the DAX sitting currently at yesterday's low. We'll look at this in a bit more detail in the 2-minute chart just to see what's going on inside of yesterday. The market kicking off in the futures, no direction at all, a bit of volatility to start with at the DP. The market was brought back. We then came down to the DP, came back to the BRN. We've got resistance here, and then the market just drifting down from this high to this low, 50 points, but very, very messy. 200 MA becoming an issue as well, but notice how they were really trying hard to get this back above the daily pivot, but failed until we got down to here, where we see some support coming into the market at what's the level here? That's 16,150. The market drifted sideways, then moved sharply lower as the announcement for Powell came in. And you can see the market moving sharply down to the Friday low, and you can see how this then became support as the market pulled back and then kept making its move back all the way through to the afternoon session there, which you can see there again, very, very quiet, but eventually breaking out to the upside, having to drive through the 200 MA there with new buying coming into the market back to the DP, which we saw in the morning. The market then coming back and trading, if I'll just draw this in for you, from here to here back to 62%. Just drag those out so you can see 62%, and then another one inside of here before prices then resume to the downside. And as you'll see, coming through this area here through the 200 MA, you will see we've got a bit of demand trying to hold the market, and also selling there as well. The demand tried to hold after the selling that came in here but failed, and truly under all of the averages there as the market then moved lower. Overnight prices, well, you can see there's the sell-off in the Dow that was on the electronic market in the DAX. See the cluster of climatic volume there as prices were brought back to yesterday's low. And then overnight we see, this is the sell-off in the Dow later on. That was the first sell-off in the Dow early evening. There again you can see the climatic action. This is just as the Dow headed towards the 9 p.m. close. Again you can see how they bought back here, and again you've got your retracement there before the end, as a lot of people got out of the short positions overnight. Prices trading down to yesterday's low. Again you can see demand coming into the market at this level to try and bring the market back, and once again we face the low. Second attempt, but failing to hold at the moment. We've closed back below this, and even despite some buying here, the market is struggling a bit. So what I would be inclined to do here, if I was looking at this in real time, is see if the market's going to hold at these levels. If not, then we're going to take out the low here where we see the buying come back in at, just get rid of this, at this level here of 16,042. There you can go, you can see that there. But the market looking very weak at the moment. And speaking of weakness, well, as I said last week, it's likely that silver's going to come under some sort of hammering, and sure enough, that is happening as we speak. Yesterday, we saw, let me just drop into the intraday yesterday. This is when Powell was selected to stay on at the Fed, and it's interesting, isn't it? Because 3 minutes earlier, or a minute or a nanosecond before the announcement, Powell was there, silver was fine, but the announcement was the excuse that JP Morgan, Citibank and co were looking for, and the hammering started, and that's going to continue for the rest of the week. I've no doubts about that. If we go back to the daily chart, we're going down very fast over the next few days, in my opinion. It's been looking they've been looking for the opportunity to sell gold and silver to bring prices back, despite the inflationary background. So you're looking down to at least another $23 down to this level. This area here will be crucial. That's the $23 level. I'll have a look at that area as a potential buying area. But if that's broken, then we go all the way back down to this level. And it wouldn't take long to do over a few days either, as seen before in March of last year and also July of last year as well. So make no bones about the speed with which they can move silver down, citing Powell as going to increase rates, etc. This is good news for the dollar, which you'll see yesterday moving sharply to the upside in the daily chart, and also on an intraday basis you can see how the dollar reacted to the news of Powell, and also going through the Friday's high as well on massive volume, finding support at this area after enough to move the market to yesterday's high at the moment overnight and continue this to the upside. Like I say, in the silver market and in gold, if we look at gold, expect these to continue to the downside. They're going to seize the opportunity, and if we look in a smaller time frame of silver, you'll see exactly what they are doing at the moment. Prices coming back here, you can see the selling, and they've continued it all the way through yesterday's close and low, and now through the 24 area. So weakness is afoot to continue lower down today. If I was given a downside target here, you've got the at least down to 23.50 would be a good downside target. We know it's undervalued, we know they're manipulating it, and they're just using this as an excuse to profit from the short side, which they've done for the last goodness knows how many years in the silver 2011 after the high. So there you go on the daily chart. There's your first downside target, 62%. We've already closed below this one, the 89% that we had drawn in yesterday. Market's gone through that. We're also going through the 100 bar moving average now as well. So 62, 78, 89 on the downside there, with the 20 bar moving average tucked in here. Actually, I think that's the 200 MA there. So sorry, that's the 200 MAs up here. So 100 and yeah, we've got the 20, the 5, and then that's the 50. Okay, that's it for this one. Let's see what happens today. But it's going to be it's a sort of low liquidity week, which will allow the traders to take advantage of these swings and drive the markets in the direction they wish to do so at this time. So yeah, let's see. And that'll do for this one. As ever, thanks for watching. See you in the next one.